Welcome, my name is Chris Hermie and I'm part of the Value Square Asset Management team. In this video, Patrick and myself will tell you all about how the sub-fund did in the past quarter. After a short market overview, we will discuss in more detail the companies that contributed positively and negatively during the quarter. The assets of Equity World are predominantly invested in shares of listed companies with no geographical limitation. The sub-fund aims for the highest possible return in absolute terms, rather than improving stock market indices. Likewise, the sub-fund aims to limit the overall risks. The third quarter of 2017 was a strong quarter for the financial markets. The S&P rose 4% while the BEL 20 improved almost 6%. The movements on the currency markets were quite remarkable as well. The US dollar dropped by 3.4% compared to the euro. The Japanese yen and Hong Kong dollar followed closely, both around 3.5%. The MSCI World, which can be used as a reference index for the fund, increased by 1% during the third quarter, while the fund grew by more than 3% during the same period. In the commodity markets, prices moved in all directions. Oil increased by almost 20%, while wheat, for example, declined by 13%. Since the start, Value Square has been convinced of the added value of investing in undervalued companies. This is called value investing. Since the financial crisis in 2007, however, this value style has been faced with strong headwinds. This is, of course, very much due to the exceptional situation since the financial crisis and the sharp decline of the long-term interest rates. As is clearly visible on the left-hand chart, the green descending line is strongly correlated with the 10-year interest rates, which is the orange line. The green line shows the ratio between growth stocks and value stocks. When the green line goes down, growth outperforms value. Since the central banks intervened to lower the interest rates, value has not done so well as growth stocks. On the right-hand graph, it becomes even more clear that on a 10-year rolling chart, the poor performance of value versus growth itself is stronger than during the technology bubble of the years 2000. The strategy that is used for Value Square Fund Equity World is based on three Value Square pillars: value, family, and investing globally. For the fund, we look for undervalued shares worldwide. A value per share is calculated for all positions, which is then compared with the NAV. The current price of the fund, based on the stock market prices of all positions at the end of the quarter, is 199.77 euros. In addition to the value pillar, we are convinced of the added value of a company's strategic anchoring. Currently, almost 75% of the shares in the fund are family-based or have a strong strategic investor. Here you can see the most important ratios of the Equity World portfolio against MSCI World Index. These ratios further emphasize the value aspect of the portfolio. At every ratio we consider important, the fund's portfolio scores better than the broad World Index. The price-earnings ratio is 20% lower, while at the level of price to book, the discount of the fund is more than 50% versus the MSCI World. The average dividend yield of the portfolio is currently 3.1%. This is some 38% higher than the World Index. At the end of this video, you will find more information about the ratios that were shown. The third pillar for Equity World is global investing. Value Square always starts from the fundamentals of a company. It does not make much of a difference where the company is listed. The graph shows the difference between the exchanges where the companies are listed and the exposure to the region in terms of revenue generation, and it is quite different. For Value Square, the fundamentals combined with an attractive valuation is what matters most. The fund contains far less US companies compared to the World Index. This is a result of the disciplined investment process of Value Square.
The fund is not an index fund. If you do want to compare the fund with an index, it is best to use the MSCI World in Euro, which is one of the most widely used indexes for funds with a global investment scope. Since the end of 2016, the Equity World Fund has been doing better than an MSCI World Index in Euro. As you can see on the right-hand chart, the fund outperforms the reference index by nearly 9%, thanks to our strong stock selection. Since the beginning of the year, the fund's return has been 10.5%. The table also shows the returns on 1 and 5 years, as well as the returns since the start of the fund. Here you can see the waterfall chart. These bar charts take into account the weight of the portfolio companies. The chart shows the contribution of the most important companies to the evolution of the net asset value since the end of 2016. Over the first 9 months of this year, Samsung, Bajaj Holdings, Anglo-Eastern Plantations, Jardine Strategic and Eurazeo accounted for the most positive contributions to the increase in the net asset value. Van de Velde, Boskalis, Camellia, Hyundai Motor and Xingda had the biggest negative impact on the total return since the beginning of this year. During the third quarter of 2017, the greatest positive impact was produced by Bajaj Holdings, Lee & Man, NN Group, Aker ASA and Eurazeo. Negative contributions were mainly Kawasaki Industria Babeka, EVS, Sokfinaf, Hyundai Motor and Xingda. Here you can see the 10 largest positions in Value Square Fund Equity World. For example, at the end of September, 2 Asian diversified family holding companies were the largest positions. The Chinese steel cord producer Xingda is number 4. Palm oil producers AEP, Sokfinaf are ranked 2 and 7. The top 10 of the portfolio accounts for 40% of the portfolio. For each of these companies, we consider the upward potential sufficiently large, and we strongly believe in the long-term potential of these companies. The Chinese carton board producer Lee & Man performed extremely well in the past quarter. Lee & Man is China's second largest paper and carton board producer, which benefited from the rising consumption and increased demand for packaging materials. The prices of recycled paper are going through the roof, but due to the strong Chinese demand, Lee & Man succeeded in increasing its average selling prices. The senior executive and family shareholders, Mr. Lee, also bought more than 5 million shares at the end of June, beginning of July. Bajaj Holdings is the family holding above Bajaj Auto and Bajaj Finserv. Contrary to what you might think, Bajaj Auto has little to do with cars. Bajaj Auto is the second largest motorcycle manufacturer in India and the world's largest producer of motor tricycles. In the past quarter, Bajaj Auto suffered from the introduction of a type of VAT in India, the so-called goods and service tax. Motorcycle sales have been stagnating in India for the last 5 years, but Bajaj Auto has the highest profit margins in India compared to its competitors. Bajaj Finserv is growing fast. In the last quarter of the year, the financial pillar of the holding saw its revenues rising with 26% and its profits after tax by 22%. The general insurance division, in particular, saw its profits increase by 62%. For insurance products, Bajaj is working with the German Allianz Group. Hyundai Motor and Xingda performed poorly in the previous quarter. South Korean Hyundai Motor published poorer results, but these are largely linked to geopolitical tensions in the region. Hyundai's car sales in China decreased with 29% in the second quarter. China is not too happy about South Korea's intention to install a US missile defense system to protect the country against the aggression of North Korea. China considers this as a threat, and many Chinese media have called for a boycott of South Korean products, including cars. Despite the very good half-year results, the stock price of Xingda was under pressure. The long-term outlook for steel cord, which is used for the reinforcement of tires, remains solid. The predicted growth of the number of cars in China is still going in the right direction. Also, the market for replacement tires will accelerate in the future. That is the reason Xingda increased its production capacity from 735,000 tons to 825,000 tons of steel cord. The company doesn't have any debt, but even has a net cash position, which is around 0.5 Hong Kong dollar per share, and the stock quotes at 2/3 of its book value. This table shows the most important transaction that took place during the third quarter of this year. As always, in our role as asset manager, we are looking for undervalued companies. The continued pressure on the South Korean car maker Hyundai Motor gave us the opportunity to further increase this position. Agias was further reduced in the portfolio. The undervaluation of French holding company Eurasio continued to decrease, therefore we decided to further reduce this position. This was the third quarter report of Equity World. Thanks for your attention, and we look forward to see you again in January 2018 for our annual update.